Imagine if the key to unlocking trading success isn't hidden in complex algorithms or intricate charts, but rather within the depths of your own mind. What if the real battleground for traders isn't the stock market, but the psychological arena within? This episode invites you to explore the profound impact of psychology on trading outcomes. We'll challenge conventional wisdom and delve into the mental strategies that can transform your approach to the markets. Stay with us as we unravel the psychological secrets that could redefine your trading journey. Welcome to Mark Douglas and the Psychology of Trading. In today's episode, we embark on a journey to uncover the mental game behind the billions traded daily. We'll explore how psychological insights can shape trading strategies and lead to consistent success. Mark Douglas, a pioneer in this field, offers a fresh perspective on how traders can harness their mindset to navigate the unpredictable waters of the financial markets. Join us as we delve into the principles that have empowered countless traders to achieve their financial goals. Mark Douglas, a trailblazer in the realm of trading psychology, revolutionized the way traders perceive the market. He proposed that the market acts as a mirror, reflecting the beliefs and emotions of those who engage with it. Through his work, Douglas emphasized that understanding one's psychological framework is crucial for navigating the inherent uncertainties of trading. His teachings encouraged traders to look beyond the numbers and focus on the mental attitudes that drive their decisions. Let's explore how his insights can transform your trading mindset. Douglas argued that the cornerstone of consistent trading success lies not in predicting market movements, but in mastering one's own mindset. He famously stated that the market is neutral, highlighting that it is our perceptions and emotions that color our trading experiences. By adopting a mindset that embraces uncertainty and focuses on process over outcome, traders can achieve a level of consistency that eludes many. Let's delve into how this shift in perspective can empower you to make more informed and less emotionally driven decisions. In his exploration of trading psychology, Douglas identified fear and greed as the twin emotions that often sabotage traders. These powerful emotions can lead to impulsive decisions and cloud judgment, resulting in inconsistent performance. Douglas emphasized that recognizing and balancing these emotions is crucial for achieving long-term success in trading. By understanding how fear and greed influence your decisions, you can develop strategies to mitigate their impact and maintain a clear, objective perspective. Let's examine how mastering these emotions can transform your trading approach. Understanding and managing your emotions can lead to profound changes in your trading strategy. By achieving emotional balance, you can make decisions that are not swayed by the highs of greed or the lows of fear. This emotional equilibrium allows traders to approach the market with a clear mind, making rational decisions that align with their overall strategy. Let's explore how cultivating this balance can enhance your trading performance and lead to more consistent results. Douglas placed a strong emphasis on the importance of accepting risk as a fundamental aspect of trading. By acknowledging and embracing the inherent risks, traders can avoid the emotional pitfalls that often accompany unexpected losses. This acceptance allows for a more measured approach to trading, where decisions are made based on strategy rather than emotion. Let's delve into how risk acceptance can serve as a shield against emotional volatility and contribute to a more disciplined trading practice. To effectively apply Douglas's principles, it's essential to define your risk parameters before entering any trade. By clearly understanding your risk tolerance, you can make informed decisions that align with your overall trading strategy. This proactive approach helps prevent emotional reactions to market fluctuations and keeps your focus on long-term goals. Let's explore how defining risk can empower you to navigate the markets with confidence and clarity. Practicing detachment from individual trades is crucial for maintaining a clear and objective perspective. By emotionally detaching from the outcomes of specific trades, you can avoid the psychological traps of overconfidence or despair. This detachment allows you to evaluate each trade on its merits and make decisions based on logic rather than emotion. Let's examine how cultivating this mindset can lead to more consistent and rational trading decisions. Regularly reviewing your trades is a vital practice for continuous improvement. By analyzing both your wins and losses, you can identify patterns and refine your strategies over time. This reflective process helps you learn from past experiences and adapt to changing market conditions. Let's explore how a commitment to reviewing your trades can enhance your understanding of the markets and contribute to ongoing success. Let's recap the key insights from today's episode. Mastering your mindset is essential for trading success. By balancing emotions and accepting risk, you can navigate the markets with greater confidence and clarity. These principles, championed by Mark Douglas, provide a roadmap for achieving consistency and success in trading. As you apply these insights, remember that the journey to mastering trading psychology is ongoing and requires dedication and self-awareness. Trading isn't just about numbers, it's about understanding yourself and your psychological tendencies. By mastering your psychology, you can unlock new levels of trading success and resilience. Start today by applying the principles we've discussed and embark on a journey of self-discovery and growth. Remember, the most successful traders are those who understand that the true challenge lies within. Thank you for joining us, and we look forward to exploring more insights with you in future episodes.